a lot. So today is the last. Today is actually the last episode. It's the last episode with Lusimadio. Too much energy, too much energy, too much energy, too much energy, too much energy. Thank you so much, Lusimadio, for coming through for us in the 100 days in finance challenge. Thank you so much, bro.
Welcome, bro. All good.
So in this last episode, guys, what exactly we're going to talk about is the future of investing. Lusimadio has been in the investing space for a while, a pretty long time. And actually, the first question I'd really like to ask is, what is your view on the future of investing? Investing and entrepreneurship, especially here in this continent. What have you seen that people need to know? Yeah.
I think the investment sector in Africa has been facing a lot of changes. A lot of involvement. Many things are changing now with the implementation of artificial intelligence in the investment space. It's been really an added value, right, to investors in Africa. Even though Africa, the data captured on the implementation of AI in Africa only falls under 2%, which is bad. But the idea is to continue to explore the opportunities that artificial intelligence brings to empower the investment sector. And also for the fact that now the African markets, or African governments, I would say some of them, are currently looking at the green sector as well. Looking at ways of diversifying their portfolios. It's not a news that most of the countries in Africa, or I would even say Africa in general, relies on oil and gas and minerals. While there is so many other sectors that are not really explored, and we need to attract investment into those sectors. We need to attract investment into the entertainment sector, into the agricultural sector, fintech sector, into the startup space. The ecosystem for investment in Africa needs really a lot of work. You need to be very honest about it. It still needs a lot of work, but we are on a good journey.
You talked about one, AI integration, and also the green financing. What about the green integration? It presents Africa with a new opportunity. And also, what about the green financing? Has Africa not really taken advantage of that you've seen? First of all, please explain to people what green financing is, because I know a lot of people maybe don't know what green financing is.
A very easy way to understand green financing simply means financing green projects, financing projects that are focused on ecological advancement, projects that are focused on reducing gas and carbon emission, and opting to a more cleaner way of producing things. You understand? So, for example, in the electricity space, we are African countries are looking at how to reduce carbon emission or oil and gas for usage of fossil fuels to generate electricity, and opt to a more cleaner way, which is the solar panel, for example, right? So, and in construction, for example, green projects will be like avoiding the utilization of carbon-emitting materials which is used in the conventional construction projects, by using carbon zero-emitting materials, right? Which are some of your 3D blocks, and and your containers, houses made of containers. There's a lot of technology around that, and which also involves the EDGE certified buildings, which are buildings that are using that have low consumption of energy and low consumption of water, right? So there's all things. So when you say green construction, simply means that your construction should have at least average 30% of consumption of energy and 30% of consumption of water, and it uses recycling strategy to reuse water that comes out from, for example, the dishwashing water that can be recycled directly and sent to for gardening, for example, or being used back for toilet flushing, for example. So those are the strategies that we see. Right? So in general, green financing simply means finding finance strategies to empower the green economy in Africa, which is your ecological focused or environmental focused, sustainability focused project across the continent. So that's basically what green financing is all about. But now Africa is looking so much into that space, but it is a very difficult. It's kind of not. I would say difficult, but I would say it is a very underserved sector in Africa, because many of us Africans, especially our governments, have not yet understood how important it is to finance that sector, how important it is to empower the projects that are coming from that sector, right? Yeah. And this project usually align directly with the SDGs, 17 SDG goals, and also with the Agenda Africa 2063. Those are projects that are focused on sustainability, right? And environmental awareness. So there's a lot of other things, that these projects are really focused on, and they all drive the economic empowerment and sustainability, financial sustainability of African countries by opting to utilizing a more an alternative way of producing things that do not damage the climate. And everybody that is focused on this green economy space are people that are very, very aware of how climate damage affects the economy in the world. So they are also very aware of climate change, right? And there's finance that goes into sustainable projects, there's finance that goes into climate change projects, there's climate that goes into sustainability practices, for example, of building more organic products, both for alimentation, and also for your clothing, for example, on your fashion, on your education sector, and everything. So, I mean, green financing is everywhere. It's everywhere. It's in every single sector which you find opportunity to make it greener. And it's not just in a specific, and it's not just it's not like it's a sector on its own. It's a methodology, basically. And another mistake which African entrepreneurs make when it comes to exploring the green sector, or the green methodology, is that they usually think that green projects should be around sustainability sector only, like recycling, for example, recycling space, for example, right? Yeah. So it's not just about waste management. You just don't go into waste management. I mean, I have a really good background on waste management, by the way. So, and I led a company, a large multi-award company in Africa that was operating in the sustainability space, but mostly in the media. And we have collaborated with some of the largest waste management associations and governments across the country, the continent, and specifically Nigeria. But you will see that most professionals feel like green economy, investing in the green economy simply means investing in the waste management space, which is not true. Waste management space is a sector on its own. The recycling, it's a methodology within the waste management space. However, the green methodology should be looked as it's a methodology which could be replicated in different sectors. You could use a green methodology in the fashion space, green approach in the entertainment space. You could use green approach in the food space. You can use green approach in the agricultural space. You could use green approach in the startup space. You could use the green approach. I mean, where else? Everywhere, everywhere. It depends on how you approach the things. It depends on how you see things. In the oil and gas, in the mining, you use green approach to avoid using materials that are damaging for the environment. Even in the safety and security space. I mean, there's just a lot that we can do by using green approach, and this is going to increase the amount of green finance that is brought to Africa and attract green financiers from outside Africa to come to Africa and explore other opportunities. So yeah, I mean, that's what I can say.
Yeah. But I think majority of the time when we say like the green financing, people don't know how big the opportunities are for them to actually finance their projects through green financing. And yeah, people like I said, you guys should really listen to what Lusimadio is saying. There's a lot that's going on, especially in the green finance sector, that you could get finance for your project if you just went the green route. You can actually find better financing for your projects other than taking the normal routes. So I think we're gonna there's you talked about AI and its effect on the investor space. Maybe you can tell guys about some of the projects that you're actually doing with AI, and so that they can know how important it is for integration, them integrating AI in their financial day-to-day activities. Yeah.
I mean, so we all know AI is everywhere right now. So it's just impossible to almost not notice how AI has been influencing the financial sector, right? Now you have ChatGPT that has an AI agent that can give you financial advice, even though it states that it's not a a professional certified advice, but they can give you some ideas on how to use your money wisely, and even some investment ideas. So that's number one. And you can use, for example, in the financial space, you can use bookkeeping apps that have AI integrated. So those applications that helps you to organize your finances, to organize your books, without you having to work it yourself. Even now Excel has an integration of AI to organize your books and make sure it creates graphs and creates everything for you clean and beautiful. There's so much that it's out there in the financial space, in the first place that actually currently uses artificial intelligence, right? You can use artificial intelligence to make predictions of a potential stock. If you are using, for example, S&P 500 platform, it has a little bit of integration of AI to give you some financial advice, for example, right? So those are things that you can have regularly to allow you to be able to get access to opportunities that you could maybe have to pay someone to get that. You understand? So the point I want you to look into as a young investor, and you want to jump into the investment space, and you know yourself that, for example, you have very little understanding about how to invest. You could leverage artificial intelligence in your favor. You get what I'm saying? You can leverage artificial intelligence in your favor, because then that is going to give you at least some kind of knowledge that will assist you to get yourself, get your feet on at the door,
Yeah.
So it's quite very, very interesting. If we have to look into artificial intelligence from a very educational perspective, I think young people today, especially those who are willing to jump into the investment space, the general mindset of people today is that they look into AI more on the side of a generative AI, and just to create posters, just to write content for their staff, but not really as a platform which they can learn from. Such important things, and really, such important
I think
things,
the other you joined with another one.
and really, okay. Wait, let me close my. I need to close here. Okay, can you hear me now?
Yeah, I can hear you. That's good.
Okay.
Okay. I think we're gonna do one last question, because this is the one that's most important. Wealth with purpose. This is something that most people don't really think about, especially this the young generation going backwards. What is your interpretation of wealth with purpose, as opposed to just getting money and just getting rich? What's your interpretation of wealth with purpose? Yeah.
Wealth and purpose.
Wealth with purpose.
Oh, wealth with purpose. I mean,
Mm.
building wealth with purpose, it means it's not just the idea of getting rich, it's the idea of building a legacy. You understand? It's the idea of remaining, you know, remaining in the space where you are able to see that you're not just using your funds or you're just not building funds or building money for your own sake. You're building it for people. You're building it for community. You're building it for the one next to you. This is why the richest in the world, they end up become philanthropists. Why? Because they've understood that whatever they've built, it's not for them. It's for the world. It's for the people. Okay? Let's put aside whatever reasons they may become philanthropists, but they've understood how important it is to give back, right? So when you build wealth and you build it for the community, that's when you build it with purpose. That's when you are a wealth builder with strong purpose. But when you're building it for yourself and you're building it just for you to have your freedom, and you call yourself I'm rich, then there's no purpose around it. There's no purpose for it. Maybe for you as a purpose because it's you, the intention, but the real purpose is not there. What is it that we can make in this life if we do not put people as priority of our in our motivation of day to day? You understand? It's the world that motivates us. When we build anything, it's the world that motivates us. There's a saying that it always comes to me is like, if you don't have a car, right? If you don't have a car, and then you decide one day, okay, I want to buy a car. So now when you buy the car, you now start thinking, like maybe not many people think like this, but this is something that I would maybe put it out there. You don't think, right? Like, okay, I'm gonna buy a car. So you want to buy a car of like, is a two-seat car, or is a four-seater car, or is it
Mm,
a van, for example,
mm, mm.
right?
Yeah.
So now your decision of which car type or how many seats in the car uh, should be at that moment, your decision will be based on how important do you see or how valuable your people, the people around you is, right? Because you may end up one day buy a car of a two-seater, and then you drive and you find like two people on your that on from your circle are walking by you, and you are driving. So now you feel bad because they are walking and you're driving, right? But you are not able to give both of them lift because your
Mm,
car is only a two-seater.
yeah.
You get what I'm saying?
Yeah.
So now, but if you're driving a four-seater car and you see two of your friends walking, you will be happy to give them a lift. Why? Because you have enough seats in the car,
Yeah.
right? So now your intention of buying a four-seater car would be, for example, that, oh, I need to buy a four-seater car because I might find any of my friends or family member walking by on the street, and I need to be able to give them a lift, right? Oh,
Mm,
I may go to this event, the family event, and maybe I might find some people who do not have a car or transport to get home, and I can be able to give them a lift right home.
yeah.
You see the thinking of buying something with purpose or building something with purpose. It's about people, because someone who has a car of two-seaters and he cannot be able to give lift to others, people will think you are stingy. People will think you are selfish. Because why did you buy a car with two-seater while you know that you have a family members and you have friends? You see? So
Yeah.
that's the mindset around it. So it's this the same idea of building wealth. Build wealth with purpose means simply you have to put people first. You have to see the world in a bigger picture. I'm building this because I want to be a benefit for others. I want to give back to others. I want to be able to impact others. That's why I'm building
Yeah.
my wealth, and not because I want to accumulate it for myself. Because anyways, you're gonna die and leave it to other people who did not even work harder for it, and they will finish it in your place, and you'll be there dead long time. You understand? So it's just useless. It's just useless. So that's my point. That's my view on this.
Thank you so much, Lusimadio. Guys, today is the final episode of Investor Lens. Lusimadio has been here with us the whole week. In case you want to recap on anything that he said, we talked from everything from unit economics to scaling your portfolio to what's it called, wealth management, and some of the things that you should do to manage your wealth as an investor. And today, the future of investing. There's so many things that we've talked about. Usmaju, in case like any final words to the people out there, in case they want to talk to you, in case they want to listen to you, any last words before we go?
I mean, any last word? I don't really have last words. I have last words. I never have last words. But anyways,
That's good. That's
I
good.
believe that everybody is. My advice would be like, we all have to understand how important it is to become an investor. You do not have to be a legal certified investor in a specific company for you to call yourself an investor or to feel like an investor. Whatever you do in life, it has to sound like an investment. Even having to give money to your girlfriend, it has to sound like an investment. So you don't want to just spend money anyhow. You just don't want to do things anyhow because you are moved by emotions. You want to be an informed investor. Know what you're doing, know the space, know the environment, know the risks. Don't fear to take risk. Just understand what the risks entails. What are the risks? If you can dodge those risks, if you can avoid those risks, then avoid them. As I'll say, the point is we all have to understand one thing. Like it or not, investment is everywhere. Knowing it or not knowing it, understanding it or not, investment is everywhere. And we are all investors. No matter what you do, everything you do is an investment. When you decide to go out and buy groceries, you are doing an investment. When you decide to take money, give to your family member or to your loved one, you are doing an investment. Because nothing that will push you to get money out of your pocket, okay, it will come back with no return. It always comes with a return, either negative or positive. Okay. Like we say in physics, for every action there is an equal and opposite reaction. So investment is like that. Investment is a give and take. Whenever you do something, there is an expectation for something to come back. That's an investment.
Yeah.
And your investment can always be either positive, can either be negative. It will never be zero. Your return on investment can never be zero. It's either going to be minus or it's going to be plus. Okay. So understand that the idea of investment is a general idea. It's not an idea of specific people that have studied investment. So then that they are experts and they know everything. No. Investment or investing is a general perspective. Okay. I really like to break down things to make it to look very simple for people to understand. They should not be looking at things as a complicated issue. No, it's not. You know, the same thing as when you give money, you're a parent and you give money to your wife to prepare, to make food. You are waiting that when you come back home, you find food. You find plate there prepared for you. That's investment. You understand? So it's the same approach that when you take your money and you give it to a company, either you're investing into bonds, which we spoke about it, you're giving your money, you are basically loaning your money to a government or to a company to use it in order for you to get return of that of investment, which is an interest plus your money that you invested, right? It's whether you are looking for a more secure and balanced life, financial life, then you invest into bonds, or you are looking for a more riskier and a more risk and higher growth type of investment, and you go for stock exchange, or you go for buying shares, or you go for something else a little bit more different, right? And plus, it is either you are looking to use other people's money to build balance in your financial life, which is leverage, basically. That's why I mentioned in the beginning, leverage is about finding balance. So people normally find financial balance by using other people's money and not using their money when it comes to investment. That is why you hear these people say a lot, oh no, never use your money, always borrow money and then you return. Like, there's a lot of nonsense out there. But the point is that people use leverage to find balance to get balance in their financial statements by using other people's money instead of using their own money. So whenever they use people's money, they generate funds, they generate profit, they keep the profit, and they just return the money back to the lender. So that means they don't even have to touch their money that they've been making for the past years. So that's how they normally do. Or you want to do a compound growth, or you want to invest in something that will grow compoundly, then you know that, okay, you will have to go for a compound investment, to earn profit above the profit that you make, or earn an interest above the interest that you make from your investment. So all these kind of things you have as an investor must be very clear of what it is that you want to do. And the base of everything is knowledge. Knowledge is in the base of everything. Do not go and try to invest into something that you don't understand. If you can't get the knowledge yourself, find someone who understands the environment to instruct you, to train you, to tell you, to mentor you. Not like you just decide to invest into any kind of business without having an understanding of it. And by the way, when it comes to due diligence, some people think due diligence in finance is only about finding if the business is legal or not. No, due diligence in finance means that you have experts in a room, which we call a war room. In finance, we call them a war room. They get in the room to analyze all the aspects of the company, from your legal part of the company, to your numbers, to who are the people in the company, to your expertise, to your capacities, to everything. That's what we call due diligence. It's not just about checking if you are legal or not, or if you have any bankruptcy before. That's not only that. So they do that because investors do that. Why? Because they need to make sure they understand your business from a macro perspective, a holistic perspective, and also from a micro or micro perspective, a smaller, internal aspect of it. So it's very important. So as an aspiring investor, I'm giving an advice is understand investment landscape, how the investment landscape works. Number two, decide on what investment you want to do. Make sure you have a clear goal set up about the investment that you want to do, and understanding of the environment that surrounds that specific investment. That includes your micro investment and macro, so the internal and external factors. And also make sure you understand the type of style, the style of investment you want to apply. Do you want to go for a bond, simple investment? Do you want to go for a compound investment? Do you want to go for a leverage? You want to use leverage in your investment? Whatever. Like, try to have this very, very clear, and then set it if it's a long-term investment or if it's a short-term investment. So in a short of resuming all the seven session that we have done, it's all on to these points. And once we have a clear understanding of what it is, we will be able to make a wise risk, maybe not risk-free, but at least lower risk investment. So that is what I can say as last words.
Wow, thank you so much, guys. You heard it from Lusimadio. There's still more to come from him. It's not like he's gone. No, there's still more to come from him. There's still more like he has to tell us, because he has wealth of experience. Me at the end of the day, me also.
Oh, and one more thing before we close.
Yeah.
This is for entrepreneurs, right? Entrepreneurs cry all the time that there's no money, there's no investment, there's no fund. Guys, you are building businesses in the wrong sector. That's your problem. Because if you are building a business in a wrong sector and you are looking for fund, you're not gonna get it. Because governments, your own government, go to your government's documents. What are their plans for the year? What is it that they are looking to achieve for the next 3, 4, 5 years? Where is the investment that the government is willing to put into for the next 2, 3, 4, 5 years? That's what you guys entrepreneurs must be investigating. You don't do your due diligence. You don't check up what is it that your government is looking for. What is it the investors are looking for? You do not check. You just woke up in the morning and said, I'm going to build a company, and then you are looking for investment for the business, and you're struggling to get the investment because you're investing in the wrong sector where the money is not there, or maybe where the money is very restricted. Okay, so build business in sectors that there is enough funds available for you. And one of these sectors is the green energy sector. It's the green sector. Okay, it's the green environment. If you guys enter into the sustainability environment and build businesses and technologies and startups, SMMEs in the environmental sector, or sustainability sector, or in a green sector, I don't know, whatever you call it, build businesses in those places, because there is where more funds are, more money are in those places. If you are building a company and you are building a company in the fintech, you might struggle to get funding. If you're building a company in the sector, let's say, for example, in the automotive, you might struggle to get funding because those are heavy sectors, you understand? And there is a lot of funding that is not in Africa for those sectors. More of these sectors funding are outside Africa. Okay, it's in other countries. Go to, I don't know, go to like if you're building a fintech, where, and also sometimes the people need to understand something. If you're building a company, you need to understand one very important thing: is your country good for that type of product? Is your country receiving this kind of services? Is your country ready for this kind of technology? If this kind of aspects you don't look into it, you're gonna build a company in Kenya that is not going to do good in Kenya, but it may do good in South Africa. It may do good in Uganda. So you need to understand those parameters. As entrepreneurs, sometimes we don't look into those things. We just go for what we want to do. And then we start crying about we don't have funding. Because you are in the, it's either you are in the wrong sector, or you're in the wrong country, or you have a wrong business model. It's either of these three. Okay? And maybe having a wrong team. 4 things. It's either you are in the wrong sector, or you are in the wrong in the wrong country, or you are in you have a wrong business model, or you have a wrong team working with you. These 4 things. So if you don't understand where your problem is, then you're gonna cry that you're not able to get investment, but you don't know that it's actually your own fault. You have not done your job. You've not checked properly if this is a viable product for you. That's why most of big fintech companies in Africa, they are not financed and built in Africa. They always build in San Francisco. They're always built in America. They always get money from America. Does that mean that Africa doesn't have money? Yes, we do have investors in Africa, but African investors are investing into SMMEs, and they're investing into small stuff. They're investing on things that they believe it's good for them to invest, and it's going to bring them enough assurance. They don't have the mindset of investing in high-risk businesses, and especially when it comes to investing into startups. It's not our thing in Africa yet. That's why most startups are built outside Africa. Most startups led by Africans are built outside Africa, financed outside Africa. So let's have this thing in mind, guys, that you can't build something in Africa that you do not understand the environment, how it is influenced. If otherwise, you're going to have an amazing product and you are in a wrong location. Okay, so that's the last point that I wanted to highlight.
I have nothing more to say. All I can say is thank you so much, bro, for your time. Thank you so much for making time for this series. I'm pretty sure the impact of this won't be felt just right now. It will be felt into the future. I'm pretty sure people will be looking at this thing and be like, wow, this conversation actually started here, and this is how it's going to go, and this is how it's been going so far. Thank you so much, bro, for your time. I won't take up more of your time. Thank you so much for your time. Guys, in case you want to see Lusimadio on LinkedIn, on Facebook, on YouTube, anywhere, you can, I'll definitely post the links on my YouTube, on the YouTube page. I'll definitely post a link on the Insta, on what's it called, LinkedIn. I'll definitely post the link on Facebook. You guys can talk to him anytime, feel free. And yeah, let's check back again because we're starting a new series from tomorrow. We're starting a new series, the Founder Series, and we're going to find Sydney. Thank you so much, Lusimadio. Thank you so much for your time. Thank you so much for your advice, especially your advice that people are going to actually look at. Guys, you can follow the updates on YouTube, follow the full videos on YouTube. The audios are also coming on Spotify, so look out for that. And yeah, thank you so much for your time.
Thank you.
All right, all right. Cool.